The Cardano-based algorithmic stablecoin Coti has just launched, and Polygon receives great reviews from an interesting source. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Last night, Bitcoin wicked down to just over 22,500 from a high of 23,900 the previous day, as investors de-risked before the FOMC meeting tomorrow, causing $46 million of long liquidations. U.S. equities lost ground on January 30th with market-wide nerves over the Fed showing themselves in a de-risking appetite. This was also seen on crypto exchanges as stablecoin deposits cooled off, reducing dry powder available for deployment into crypto assets. As Bitcoin shows a minor bull run, the connected mining ecosystem's year-long struggle for survival has started to pay off. In the first month of 2023, the Bitcoin mining community experienced a 50% increase in revenue through mining rewards and transaction fees. Bitcoin mining revenue jumped from $15.3 million on January 1st to nearly $23 million in the span of 30 days. As more miners join to power and secure the decentralized Bitcoin network, the hash rate continues to reach new all-time highs. The Bitcoin hash rate stands at around 300 exahashes per second. This time last year, Bitcoin's hash rate was roughly 182 exahashes per second, making for a total increase of over 67%. Twitter chief Elon Musk has reportedly instructed his developers to build the platform's payment systems in such a way that crypto functionality can be added in the future. According to a January 30th Financial Times report, two people familiar with Twitter's plans said the payments feature will support fiat currencies to start, but be built to accommodate cryptocurrencies should the opportunity arise. Twitter has long teased bringing payments to the social media platform, forming part of Musk's stated plan to make Twitter an everything app. In early December, images were leaked revealing Twitter coins, a secret in-development digital asset to be used for payments and tipping on the platform, with many hoping it would involve crypto in some way. And in November, Twitter Payments LLC registered with the U.S. Treasury Department's Financial Crimes Enforcement Network, or FinCEN, which would allow it to process payments. In a Twitter Space event around the same time, Musk said he envisioned allowing bank accounts to be connected to Twitter profiles and incorporating debit and credit cards along with the platform to be able to facilitate money transfers. Following the future approval of the U.S. licenses, Twitter be eyeing gaining regulatory approvals internationally. Elon Musk also recently said this:
I do think there is a role for crypto in the future, without speaking to any particular crypto coin, as a means of ensuring that the monetary system does not get completely corrupted. It provides competition to the fiat system.
So when Elon Musk introduces crypto payments across the platform, which two cryptos would you propose Elon Musk use on Twitter? Bitcoin, ETH, Cardano, Matic, or Dogecoin? Pick two and let me know in the comments down below, and the best answers will be featured in our news video tomorrow. Aleph Zero has won auction number 38 for the Polkadot Parachain slot. The bid has been made in an effort to secure the infrastructure for the upcoming Aleph Zero bridge to the Polkadot ecosystem. Aleph Zero is a layer 1 privacy-enhancing blockchain that ensures scalability, low transaction fees, and maximum security guarantees for developers. One of the key drivers for a layer 1's performance will be its rate of adoption. Aleph Zero utilizes the Rust programming language, a high-performance coding language already used by Solana and Polkadot. This will make it much easier for developers to migrate over. And on top of this, Aleph Zero utilizes ZK snarks for a privacy layer. Its technology, Liminal, adds privacy while bridging the network to other platforms. Privacy will be key for institutional adoption and could place Aleph Zero perfectly to take advantage of this. Damian Strazak, a developer at Aleph Zero, said, "We're excited to take this significant step towards becoming closer to the Polkadot ecosystem. It's important to note that Aleph Zero remains a sovereign, standalone chain and not a parachain by definition. We've built a network based on our own Aleph BFT consensus protocol and combined it with the substrate framework. The parachain slot serves strictly as a bridging mechanism. This new parachain slot will highly broaden the capabilities of the Aleph Zero network, as obtaining this slot is a critical step towards establishing a two-way connection between Aleph Zero and Polkadot ecosystems. The parachain slot will also allow Aleph Zero to indirectly bridge to Ethereum." Virtual world, the Sandbox's Sand token is witnessing a surge in price over the month ahead of its token unlock scheduled for February 14th. Token unlocks are usually considered bearish events, as the project will be releasing 12% of the token's supply, equivalent to around $273 million worth of sand. They'll be releasing it to seed and strategic investors, with half of the 12% going to investors. Sand is the utility token used in the Sandbox ecosystem for transactions and interactions. Its price has increased 90% since the beginning of the year and is now trading at 74 cents. But we all know why it's rallying ahead of this unlock. VCs are dumping money into the project to get the attention of retail to FOMO in and drive up the price so that they're able to cash out more. The day after the last unlock on August 14th, nearly 75% of all significant trades were sell orders as investors looked to cash out of Sand. That sell pressure continued in the days after the unlock as sell orders dominated buys. The allocation of Sand unlocks is skewed towards investors, and the token performance has suffered during the unlocks as a result. The Sandbox has an unlock schedule that is due every 6 months until 2025 with the same allocation to investors. So as a general rule of thumb, a better time to accumulate tokens is after a token unlocks and then dumps. And the best time to take profit is the time leading up to a token unlock as VCs are driving up the price. DJED, the over-collateralized stablecoin on Cardano, is now live on mainnet. The DJED platform can be accessed at DJED.xyz, and DJED is also available on MinSwap, WingRiders, and MuesliSwap. They also expect it to be listed on other platforms in the Cardano ecosystem, and as recently announced, Bitrue will be the first exchange to list DJED and Shen. With over 40 partnerships to enable its proper utilization and adoption, DJED will also unlock opportunities for the Cardano ecosystem around DeFi, payments, and more. The liquidity provision took place last night, bringing the DJED reserve ratio to a healthy 600%, which is an optimal ratio for launch as it will allow users to mint both DJED and Shen upon launch. Part of their future plans for DJED are to add other assets aside from ADA as collateral to mint DJED, saying our plan is to add other coins, especially wrapped assets like wrapped Bitcoin and wrapped ETH as collateral to mint DJED on the Cardano network. MuesliSwap will be offering yield farms for the stablecoin pools and reserve coin Shen. They'll be doing DJED ADA and DJED IUSD, which will be concentrated liquidity pools, and the liquidity pools for DJED ADA, Shen ADA, and DJED IUSD will have yield farms to earn users M-yield tokens. The Nasdaq recently wrote about Polygon and how there's one cryptocurrency that has the momentum of a different type that could make it the Ethereum of 2023. Polygon, the blockchain, has become the go-to for corporate America. Polygon is a layer 2 blockchain built on top of Ethereum, and corporate partners have flooded to Polygon in part of its scalability and development resources, and in part because Polygon is paying millions of dollars to attract them. Instagram has enabled NFTs on its platform, Stripe is using Polygon for payments, and Starbucks is using it for a new NFT loyalty program. Polygon gets to ride the development capabilities of Ethereum while attracting businesses with its lower costs, and once businesses start to flock to Polygon, others will naturally follow. This was a similar dynamic to the NFT wave of 2021. Ethereum became the go-to blockchain, so why build anywhere else? It looks like this will likely be the case for Polygon, but it's corporate money flowing into Polygon this time. Ethereum turned deflationary 2 weeks ago with its net supply increase turning negative for the first time in over a month. But while Bitcoin has gained nearly 43% this month, Ether has appreciated by just 36%. Some of the reasons for its underperformance compared to Bitcoin include defensive positioning ahead of the Shanghai upgrade. In a few months, this will enable withdrawals of ETH from the beacon chain. Some fear a share of these unlocked tokens will be sold. The whole staking balance of 17.26 million cannot be withdrawn on the day of the upgrade, however, and only 43,200 ETH can be unstaked per day. However, the total staking rewards of the past 2 years, which equates to around 1 million ETH, can be withdrawn instantly. Another factor being the previous crypto market upswings began with Bitcoin leading the way higher and altcoins, including Ether, outperforming Bitcoin in the later stages of the bull market. History seems to be repeating itself, with Bitcoin and stablecoins still being preferred as a gateway to the crypto market. We see this in the strong increase in Bitcoin spot volumes. Meanwhile, ETH spot volumes have not increased as much. The market cap of USDC, a stablecoin issued by US-based payment tech firm Circle, has dropped below $50 billion for the first time since January 2022. A few reasons for that include Binance, the world's largest crypto exchange by volume, announced earlier in September that it would convert its users' USDC balances for its own stablecoin, Binance USD. The USDC supply held by the top 1% addresses, aka whales, has also dropped to 88% in September from its highs of 94% in February. The plunge was accelerated after Terra, a $40 billion algorithmic stablecoin project, collapsed in May, stirring negative sentiment towards the entire stablecoin industry. And the USDC market cap also plunged after the US Treasury imposed sanctions on crypto mixing service Tornado Cash over money laundering concerns. Circle responded to the sanctions by freezing all USDC wallets owned by Tornado Cash. The firm also prevented addresses that may be associated with the banned mixing service from using USDC. In contrast, USDT, or Tether, avoided blacklisting Tornado Cash addresses. People have now realized that there's more risk in holding USDC. That's it for Altcoin Buzz news update. I'm your host, Coti Buffington. Thanks for watching.